Morning, everybody. It is Wednesday, February 28th, 2018, and it is the last day of the month of February. I'm sure a lot of investors will be glad to, traders will be glad to get this one off the books. At this hour, well, first of all, let's set the backdrop. Yesterday was a rough day for equities. They fell pretty hard. Asian markets and European markets followed suit. A lot of this was on the back of testimony that Jerome Powell provided before the House Financial Services Committee yesterday morning. And the biggest thing that folks have noted is the decidedly more, what came across anyway, as the decidedly more hawkish tone compared to the text of his testimony that was provided or that was released in advance. And because it was a question and answer session, Mr. Powell had the opportunity to expand on things a little bit more. Despite attempts to, paint the Fed chief into a political corner with respect to passing judgments on, the administration's fiscal policy, or et cetera, et cetera. He stuck to his guns as far as, monetary policy is their tool, even if it's in reaction to fiscal policy or, certain other, pieces of economic data, whether they're a result of administration actions or if they're structural in nature. I'm sure there are replays of his testimony that you can watch if you like. But basically, I think a couple of things that stood out was, first of all, the statement that a lot has changed today compared to in December or January, and that as a result of that, the FOMC should take a fresh look at the rate path that they're on in light of the new data. I'm paraphrasing what he said, but that's basically what he said. Now, futures are firming a little bit this morning. A lot of that has to do with the fact that some economic data came out which doesn't necessarily paint a more dovish picture, but it's mixed, which I think investors will take anything at this point. Some measures of inflation came in softer than expected. The gross domestic product price index came in at 2.3% against a consensus of 2.4%, and the personal consumption expenditure, the PCE deflator, came in at 2.7% against a consensus of 2.8%. Domestic product and core PCE, so core PCE is if you strip out inflation or if you strip out energy and food, came in on target, 2.5 on GDP and 1.9 on the core PCE number. Now later this morning there's going to be some data coming out. The Chicago Purchasing Managers Index is going to be out, and month over month and year over year data on pending home sales. I would expect that trading will be a little bit slower, a little bit less volume today because of the slew of economic data that's coming out tomorrow morning. There will be more PCE data coming out tomorrow, personal spending, personal income, initial and continuing jobless claims at 8:30 a.m. Eastern Time. The market manufacturing PMI will come out at 9:45 Eastern Time, and month-over-month construction spending, ISM manufacturing PMI, and ISM prices paid all came out at 10 a.m. That is a lot of data to come out. In addition to that, Jerome Powell will be testifying before the Senate on Thursday. Yesterday was the House, tomorrow will be the Senate. So there will be a lot for investors to chew on and parse and ruminate about tomorrow. So I don't expect anybody taking any definitive positions today. I'll be paying attention to the put-call ratios, which I've been looking at over the last few days. I'll be taking a look at how those develop today. And the volume of contracts that will transpire or will transact. Don't know what to expect there. If we take a look at where the major indices sit as a result of yesterday's price action, having backed off quite a bit from the rally of Friday and Monday. Starting with the NDX, I think that one would be the most interesting. The NDX and the NASDAQ composite, because of the fact that they were poised to take the highs that they had set on the 26th of January, their most recent highs. As you can see here, where this oval is, then that was where the NASDAQ was heading. Mr. Powell's testimony caused that situation to change, not putting the blame on him. That's just how the cookie crumbles. So this level here was the high that the NDX and the composite were, poised to take. The Dow, the Russell, and the S&P were a little bit further from, so had some, more weight. Obviously, the Dow had quite a ways to go. It would have needed to have broken through the 73.6 retracement level in the Fibonacci to have made it up to 2616. Similar story with the S&P. If I can get these charts to load, maybe I should just talk slower so that my computer can catch up with me. I'll take a sip of coffee. How's that? This Fibonacci will draw here in a second, but obviously, this is the high. The S&P rather had a ways to go to get there, but now reversing course. And the Russell, similar story with the Russell. Now, one of the things that caught my attention yesterday was a spike in volatility. The VIX, which is the volatility on the S&P options, was up almost 20% yesterday. It's down 4.5%. Don't have a read on the RVX, which is the volatility on the Russell 2000, but that was up yesterday as well. It was up 15%, so not as much as the S&P. Now, the Russell has broken back through this 61.8. So 61.8 has been a sticking point for the Russell. You can see that it was only able to close above it. It wasn't able to close above it after many attempts on the 23rd. Closed above it again on the 26th, which was Monday, and then fell back through. So we'll see if it's able to push through again today. Like I said, futures are firming. Nothing really outstanding. I mean, the Dow futures are up 30 bips. The NASDAQ futures are up 0.4%. The S&P futures are up 0.25%, and the Russell is up 8 basis points. So the Russell has the least relative strength of any of those indices. The yield on the 10-year note is down 0.75% at 2.886. The dollar index is up 15 basis points. Gold is up slightly. Crude is up. I think when I wrote the Traders Espresso, energy commodities were down, so crude futures are actually up. Copper and platinum are down. Gold, silver, and palladium, and soft commodities. So soft commodities are your agriculturals, your soy, your corn, and your wheat. Those were up quite a bit actually as well. So seeing some food inflation, which when you strip that out of the core PCE doesn't really look like inflation. So that's pretty much it. Like I said, I expect kind of lighter volume today. So pay attention to the indices, the futures, whatever your preferred measure is that you watch or trade, your individual issues. First 5-minute, first 15-minute, kind of see how things shake out. I think that will set the tone for the rest of the day. I think that there will be a lighter volume, lighter trading today. So that would tell me there's probably going to be some, there's going to be some choppiness in the markets. Again, my reason for saying that is because there's a tremendous amount of data that's coming out tomorrow, and investors aren't going to want to get caught directionally. They don't want to get caught flat-footed when the numbers come out. The numbers come out tomorrow. They suggest hotter inflation, or greater increase, greater than expected numbers in the Chicago PMI or the Purchasing Managers Index, whatever it could be. There could be a curveball coming out of anywhere. So, having said that, trade cautiously, and we'll see you on the other side of the live stream. Thanks for tuning in.